If you've been watching the market and thinking that something feels different, then you're absolutely right, because there's different things happening right now. Eric's going to break down what's happening with mortgage rates because they're all over the place. They're down, then they're up again. It's wild. I can't keep track of what's going on. So let's jump to Eric for the latest on what's really happening with the rates and what to expect heading into winter.
Sure, Ben. God, that's a lot to unpack, right? So we are now on day 31 of the government shutdown. So that means a lot of things to a lot of different people. One, huge detriment to the economy, right? In that we have millions of folks being furloughed for the government that are going without pay. We're heading into the holiday season. First off, I would say our heart goes out to those people who are kind of getting ran over by a freight train right now, a political freight train, with what's going on in Congress. So that is really, really sad. The second thing that I think we should talk about really is the Fed meeting from yesterday. So, the Fed cut 25% or 25 basis points off the federal funds rate again, which was known coming in. They had signaled that they were going on. But again, like the last few cuts, they cut rates and mortgage rates go up. And everyone is probably scratching their head saying, what in the hell is going on? And what essentially it is, and what happened was our Fed chairman Jerome Powell. I'm pretty outspoken about not a huge fan of Jerome Powell, but um, he lowered the federal funds rate by 25 basis points. Now there was two dissenters, meaning two governors that voted opposite. One of the governors voted that he wanted a 50 basis point cut. He said he didn't think we were cutting rates enough. The other one, the St. Louis Fed chair, said he didn't think there should be a cut. And this is in light of we've been on day 30, 30 days of a government shutdown where essentially the reports that they use to determine which way the economy is going haven't been published because those departments are furloughed. So we haven't had our normal unemployment data. We haven't had normal inflation data. So the Fed, to an extent, is flying somewhat blind. They're not completely flying blind because there are private companies, ADP, Covalescence. There's a number of them that put out their own reports that kind of mimic the similar government reports. And so if they wanted to, they could have some information. But essentially what had happened, the Fed said a lot of positive things yesterday. They said we're cutting rates by 25% or 25 basis points. So we're going to end our federal runoff. The one kind of negative to that was they said when we start reinvesting this bond runoff that we've been doing, which would be really favorable for bonds, they were going to reinvest in shorter term securities instead of longer term. Longer term would have helped mortgage rates more. The market was okay with that. It was okay with the dissenter. What happened was Jerome Powell opened his mouth at the end of his speech, and when asked if they were going to continue to cut rates instead of being non-committal on anything, he said, well, we are really looking at if we want to do that. And it is not a foregone conclusion by a far margin. Within 3 minutes of that, the bond market tanked and mortgage rates shot up. So the one thing that the bond market loves is to understand what they think is going to happen next. And so that threw a lot of indecisive as to whether they're going to continue to cut rates, even though I would say every metric in the book says they should be. And really kind of scared the markets. And you'll see, you and I were talking about right before we got on, Ben, since then we have the stock market going down. We have a number of things. It scared all the markets. And again, it was one of his comments after that I feel like was not well weighed as to what he wants to do. So there's a lot going on in the market. Honestly, the fundamentals, guys, rates are going to continue to come down. They're just not, it's not going to be a straight line. And especially with all these little snafus and the things in the news, it's going to be a bumpy ride down, but they should continue to still trend down.
Yeah, everything you said makes a lot of sense. I was just looking at my phone to see where the stock market is today because yesterday, I'll tell you what, it took a pretty large beating. It was bad, 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 bad. Let's talk about home prices in Metro Detroit, Southeast Michigan. We're seeing a turning point, and I've talked about it before. There was an obvious turning point in June, July. We look at a median sales price in Southeast Michigan. It peaked in July at $295. Today, it's at 285. So that's a 10% or a $10,000 drop in just 3 months. If we talk about average sale price, it dropped from 354 in June to 347 today. So for the first time this year, prices are actually starting to slide, right? And I haven't seen that for quite some time. We really had a great first quarter. We had a really strong run up from January to about June, end of May, June, and then boom, the graph literally takes a hard left turn midsummer. The market momentum has shifted. It definitely has. The sellers are feeling it, the buyers are watching it. Me as a listing agent, I'm feeling it. The listings surged. There's a flood of inventory. Back in February, we had about 8,200 new listings hit the market. 8,200 in February, new listings hit the market. By July, that number doubled to 16,000 new listings in July alone. That is a massive wave of homes that are hitting the market. That's creating more options and more competition for sellers. So if for my sellers, for our sellers, this is where it gets tough. Your home is no longer the only game in town. It's not the only show in town. We've got the highest number of homes for sale that we've had in the last 5 years. In the jaw dropper in February, there was only 16,700 active listings. Today, we're at 25,700. So that's 9,000 more homes for sale today than there was just in February, 6 months ago. That's the highest number of homes for sale in Metro Detroit since September of 2020. The highest number of homes for sale in the last 5 years. So let that sink in. This market has more inventory than we've seen in 5 whole years. The month supply of inventory, the seller advantage is disappearing. Earlier this year, we were at a solid 1.7 months supply. Now we're at 3 months. And that's a big deal because we're starting to go towards that tipping point of a balanced market or even a more buyer favored market. I mean, we're not there, but we're definitely heading into the balanced market lines with inventory or month supply of inventory. The lines on these charts are crazy. They're shooting straight up for month supply of inventory. And we can tell that buyer demand is falling because when I look at pending sales or accepted offer, they really tell the story. Now, in June, there was 11,000 accepted offers. Now it's 9,500. So again, we see these sharp lines from February to now with inventory, number of homes for sale, but we see our accepted offers sharp line going downward, which is a strong indication that buyer demand is dropping while the inventory is rising. Fewer accepted offers, it generally means fewer buyers are in the ring, fewer buyers are in the market. The closed sales are down too. In July, there was 11,000 closed. Now there's 10,000 closed just last month. That's the confirmation that the buyer demand is cooling even as the supply heats up. So that's what we don't want. We don't want to see hard lines on inventory and then hard lines going down on demand. It's a terrible combination. And the price reductions in the last 7 days, almost 2,500 price reductions. That's a lot, but think about this. There was just over 2,000 accepted offers. So there was almost 500 more price reductions than there were actually accepted offers. That's more homes that are cutting prices than they're actually going under contract. Eric, we haven't seen this many price drops in many, many years. And the sellers, they're chasing this market that's moving downward. We're literally our sellers, my clients, my sellers, we're chasing this. We're chasing a market that's just going down, right? It's a terrible position to be in. And the buyers, they have such an advantage for the first time in many years, at least the last 5 years. Buyers have more leverage in according to the data, and in my opinion, they have more leverage than they've had in the last 5 years. More homes to choose from, sellers are more open to negotiation, price cuts are becoming a normal thing. It's not 2021 anymore. It's definitely a different market. So that's where we're at. We got more homes, fewer buyers. The prices are finally cooling off. So if you're selling, you got to price strategically, you got to stage beautifully, and you have to adjust quickly. That's the most important thing. If the market's not responding to it, You gotta make that adjustment quick and not wait because, again, we're chasing a market that's moving in a downward position. The market's moving extremely fast. So if you're buying, don't wait for that perfect rate. You got more leverage today than you've had in many, many years. Right now is your opportunity if you are a buyer.
I'm with you, Ben. And the advice I'd give people is you are going to save more off the price of the home right now than that rate dropping a percent is ever going to save you. Now, maybe not over 30 years, but you know what? The average homeowner in the United States stays in a mortgage for 4 years.
4
And
years.
yeah, it's 4 years. A mortgage is not a long-term thing. The percent that actually stay in their mortgage for 30 years is less than 3%. So it's not gonna you're gonna move for one reason or another. You're gonna refinance for a better rate, which is highly likely anyway, right? Or you're gonna take money out to fix the roof. There's all these different reasons why you're not going to be in that mortgage. You are over the time that you have it, you will not save the thousands of dollars that you can potentially save off buying a house right now. And it's something people need to get their heads around because the market's going to eventually own out. This is not going to be a drop off the cliff market. It's going down and it's going to go down really probably until interest rates start to turn. And then it's going to turn back up because guess what? There's only so much land and so many houses in this world, and there is more people every day. The average home buyer has went from early 30s to late 30s. These people want to start lives and families, and they're just waiting to do it a little bit longer. But that demand is building up. So if you can beat them to the punch, if you can get that house under contract right now, take advantage of it.
There's a lot of deals to be had out there right
There
now.
is a lot of deals to be had, and people need to get their heads around that, strike while the iron's hot. Don't wait for everyone else. Don't follow the crowd, lead the crowd.
Yeah. Yeah, absolutely. And on top of that, I mean, what do you think, when Powell's term is up in May?
He is a lame I mean, he's gonna be a lame duck. Scott Bessent, the Secretary of Treasury, has already said they highly intend to name a predecessor before the end of the year, which in my mind probably puts him in a little bit of a lame duck status and at least puts some measure of pressure on him to go along with what his predecessors is saying. Powell was the guy that waited too long to raise interest rates and causing all this inflation. They kept on saying it was transitory inflation. It didn't matter. It wasn't long term. Well, everyone else, every other expert in the world was saying it was. I mean, Powell is a lawyer. He is not an economist. I don't really know why he's in that position to begin with. But he waited too long to change it. He's waited too long to cut him back. He's not looking forward. He's looking in the rearview mirror and he's not seeing where the puck's going. He's not skating to where the puck's going. He is skating to where the puck is. So I don't know.
Yeah.
That's
Good
my
final words.
that's dumb speech.
Good final words. I'm looking forward to when his term's over.
Yeah, me too. Me too.
Leave it at that.
Me too.
Everyone have a great weekend. Thanks for watching, and we'll see you in 2 weeks.